what's happening, everybody? So, welcome back. We're got kind of an interesting one here for you guys. This has actually been coming up a lot lately. The taxes question. How do taxes get banged out while you're, let's say, being a digital nomad here in, let's just say, Vietnam? How does that work? I mean, you can't just blow it off, right? You got to do something. Well, I actually wanted to spend a little bit of time and dig into this because, again, a lot of folks have these questions. I personally file my taxes while I'm here, and I obviously, want to follow the law and so forth. But it's hard to also find information on how this stuff works exactly. Meaning, if you were to pick up the phone, let's say you're a digital nomad here in Vietnam, you pick up the phone and you call a dude, an accountant in America. Well, this is kind of an unusual situation, isn't it? He may be able to help quite a bit, but may not. So either way, I wanted to do my best to give you guys kind of an overview here. Now, obvious disclaimer time. I'm not actually an accountant. I don't actually have any degrees, and I'm not an expert. I'm not a lawyer, stuff like that. Be that as it may, I can definitely point you in the right direction. Definitely give you the last 5 years of experience. Definitely give you, let's say 100 hours of research and thousands of dollars worth of transactions worth of advice. And certainly, again, give you the right links and point you in the right direction, give you some help in that regard. So what I'm basically going to do is base all my information, stats, and so forth directly off like IRS.gov. Straight up, what does the man say? Now, this live stream here is directed towards Americans, of course, because that's the only one I feel I can authoritatively talk about from a firsthand experience. But a lot of aspects are going to be kind of relevant to most countries most of the time. But whatever, we'll just do our darndest, to get where we can. So, hell, let's just dive right in. A lot of people actually live here in Vietnam for a year or 2 years. And some examples of folks include folks who work online and or are digital nomads. And let's say they do web design or side gigs or logos, or hey, maybe they are a English teacher online. Awesome, great choice. Hey, and maybe they work for a school officially here in Vietnam. Awesome once again. So what really happens here? How does this actually fit together, and what do you do about the American side? Well, category 3 are folks who retired and then want to move out here to spend their retirement money and time. Awesome. Great choice, by the way. Great choice for a lot of reasons. Oh, man. Where to begin? Well, first of all, let's bear this in mind, that the United States is a rather unique country in the sense that you're basically obligated to pay taxes for the rest of your life. As long as you're an American citizen, you got to pay taxes back to America until the day you die. And even then, you owe some. Okay, so it's one of, as far as I know, the only country on earth that obligates you to pay taxes on all foreign earned income, regardless of your residential status, regardless of anything, for the rest of your life. Whew, right? So, what does pay taxes actually mean? Well, it means a few different things. Okay, so basically, we've got our main ones. So let's try to kind of handle these one by one. One, federal income taxes as you would normally define it. Okay, so that just means like, yeah, you earn $50,000 while sitting here in Vietnam. How much do you owe the United States? So federal income tax is based on income that you've actually earned. Okay, so that's a big one. Number 2, don't forget, is state income. For example, I'm originally from Wisconsin, so yeah, I would have to file my taxes in Wisconsin, generally speaking, by default. Yeah, every year, and thus I would owe them, Wisconsin, a certain percentage of my income. So once again, that's income tax, state income, federal income, state income. Cool. And now number 3, now this is the gotcha. They call it employment tax, which is a fancy way of saying like Social Security plus Medicare, which, by the way, works out to 15.3% flat across all income levels. This one is the gotcha, and we're going to be focusing on number 3 here a lot throughout this broadcast here, because this one is the most, I would say, unavoidable and the stingiest, the nuttiest, the one that's against the other normal rules. So let's dig into it one by one. It's a complex topic. I'm going to do my best, to kind of bang them. So first of all, living in Vietnam as opposed to living in America, there is one ridiculously huge tax benefit to this, okay? And this is actually called like the earned income or foreign earned income exclusion. Okay, I wanted to be accurate. Yeah, foreign earned income exclusion. So basically what this means is they have this line, which is $107,000. That means if you, as an American, want to move to, let's say, Vietnam and live here for a year, you get a $107,000 deduction on your taxes, which is another way of saying your first $107,000 are not taxed. They're basically tax-free as far as normal income is concerned. Sweet. That's huge. That's huge. What that means is if you, let's say, earn 80 grand a year in America as a consultant, la-di-da, you've got to pay a certain amount. And let's remember, 1, 2, 3, certain amount of federal income tax, certain amount of state income tax, and a certain amount of employment tax. All right, so be it. Effectively, your federal income tax becomes 0, basically, because you get to subtract 107 grand because you're not living in America. That's sweet. That's sweet. Obviously, if you earn more than 107,000, then you're going to have to start paying taxes on the rest. So far, so good. Fair enough. Well, let's also bear in mind that a lot of folks sitting here in Vietnam as, let's say, independent consultants, etc., don't typically earn 6 figures a year. Most of the time, a lot of folks are rolling in at about 10, 20 grand. Something along those lines. That's all you really need to survive out here. Okay. But the fact remains, this foreign earned income exclusion is a huge one, a huge game changer. So while I was in Mexico, to give you an example, I ran across a lot of folks that were independent consultants and or managers of a business in the States, and they realized as soon as they moved their office to Mexico, and they can work over voice over IP, Skype, you name it. Yeah, their income tax liability just went down by 30 grand. Effectively, they could live in Mexico with all expenses paid for the difference of the tax savings. It's awesome. It's awesome if you can. Absolutely awesome if you can. So yeah, moving to a foreign country when earning income, especially if you can do so digitally and so forth, is a big benefit for this reason. Now, the fly in the soup is employment tax, Social Security, Medicare. And we're going to keep coming back to this. That's 15.3%. That means if you earned $100,000 in 1 year, you would owe 0 income taxes to the state, 0 income taxes to the federal government, but you still owe 15.3% employment tax. Yep. Ouch. Yeah, that's 15 grand, my friend, you know, if you're at that particular level. And you can't deduct your way out of that one. Yeah. So that's definitely a gotcha that hits a lot of people, including me while I'm out here. And we've got to keep in mind as we kind of go through the whole process here. So anyway, let's go back to a different topic here. Does a person, when do you need to file your taxes at all? Okay, so to say this a different way, can you just not file your taxes at all and then just get by sweet? Could a person move to Vietnam and then just not do a damn thing related to their taxes for 5 years, then go back to America and then start filing again like normal? I mean, isn't it kind of weird to have like a 5-year gap where you didn't even file anything? The answer to that question is, yeah, it's called non-filer status. Right. Yeah. As a matter of fact, the IRS accounts for the fact that a certain number of the people in the United States don't file for various reasons. I mean, let's just imagine the 60,000 homeless people in Los Angeles. Yeah, they don't file. Just the person who worked as a waiter part-time for 1 summer, and that's it, just in, out, they don't file. How about let's just say a volunteer or a priest or someone who's a student? Right. People who don't earn much money and as a result don't owe much don't need to file. What this really comes down to is something called the personal deduction, or there's basically a minimum floor, a minimum threshold. Here, let me pull this up to make sure that I'm saying the exact right words. First, let's just pick an example. In the state of Minnesota, if you owe or if you earned less than $12,000 in 1 year, well, as a result, you would not even have to file. Not only would you owe 0 taxes, you wouldn't even have to file them. You wouldn't even have to file them. And if they ask you the next year or 2 years later or 5 years later, hell, anytime, 10 years later, you could say, I didn't earn enough to even qualify for filing status. Okay, done. Well, that's a pretty big deal. That's a really big deal. So what that means is for American people who are living in Vietnam here, if you are earning less than $1,000 a month, sweet. Yeah, you're getting into a real sweet spot. Yeah, you're good to go. Now, a lot of states along the way have a residential status check mark. What that means is, would I need to file or filing my taxes in, let's say, Minnesota? They pick a number like 163 days. That means for me to qualify as a Minnesota state resident and thus file my taxes, I would need to have 2 things true. Number 1, I was actually in Minnesota for 163 days, which is 5.5 months a year. And number 2, I earned more than $12,000. If either of those are false, don't got to file. Boom, tax-free. Yes, totally legally. Yeah. So for most digital nomads who are currently in Vietnam, let's just say, no, you don't have to file state taxes at all because you're not actually residing in that state. Now, 163 days is just an example from the state of Minnesota pulled off of their, appropriate sources. But I'm sure it might be a little different state by state. But generally speaking, if you are living in a foreign country, like here, with under the circumstances, you don't need to file with your individual state. So that's just like a straight done. So yes, if you're retired and you get you get your military pension or stock benefits of some kind, even if it is over 12,000, but you're not living in that state, good to go. Good to go. Now, let's zoom over to the federal side. Okay, this is getting a little more interesting. Well, what I want to mention to you guys, and I'm going to write this right now on this site, is the IRS Publication 505, 501. Now, what this basically means is that a given person, this will specify exactly, does a person need to file yes or no? And so this will actually give, here, hopefully, toss in the comments right now. I'll do my best. Oh, yeah, there we go. All right, that'll show up eventually. This is actually the full PDF that gives you exactly the right information. Now, in particular, this file comes from the IRS themselves. So this is their definition of it all. In other words, you don't have to question their integrity. You don't have to question, is this some guy writing? No, this is the man himself. So it's a pretty digestible document, but more to the point is, where do you fit in and where are the key numbers here? Okay, first, the biggest question is, do you need to file taxes whatsoever? Because if the answer to that question is no, we're done here. And you can kind of hit stop on the rest of the video and be done with it and move on with your life, okay? So that's the most important question, and the starting question. Do you need to file? And the answer is, well, for many people, no. In particular, I will pull up the exact thing if I can. And specifically, if you are single, yep, 12 grand, 12,000 to be exact, 2019, $12,200. If you are single, if you earned less than that in general, but normally speaking, you don't even need to file. And as a result, you owe zero taxes to America whatsoever. And it's totally legal to not file. No worries, no tax evasion questions. Done. Walk away. Cool. Now, if you're married, that number is twice that. Go figure. Yeah, so it's in the neighborhood of about 20,000, 24,000, something along those lines. Cool. Now, it gets a little funky because if you are married in general, and you're not doing it jointly, you're doing it separately, yes, you need to file for sure. Other situations where you absolutely need to file include if there is something having anything to do with alimony, child support, you're receiving money from the government in any way, shape, or form, you're receiving Social Security, receiving benefits of some kind, you're over the age of 65 and all your retirement money's coming in, you got a bunch of military pensions and stuff like that, yeah, then you got to file. Whether or not it's above or below 12,000 doesn't matter. If you're one of those special cases, you got to file no matter what. That's that. Now, so here is one more kind of tricky thing. And this is the crux of it all for a lot of people, especially if you are working online as an independent consultant and or you are, let's say you're a teacher online on, over Skype or something like that. And you do some logo design and website stuff on the side. Cool, cool, cool. Well, do you got to file yes or no? Well, the fly in the soup is if you are an entrepreneur, if you are an independent contractor, regardless of where you are on earth, if you are, quote, running your own business online or otherwise, and you are an American, regardless of how much money you make or don't, yes, you need to file your taxes. And yeah, so that's actually one of the major questions going on here. Now, that sounds kind of clear on the surface, right? Like, hey, if you indeed are, oh no, here's my little logo and design and website, and here's my ebook that I sell. Here is, blah, blah. Generally speaking, yeah, you've got to file. Now, this is a big deal because let's just say, for example, if you make $10,000 a year while sitting in Vietnam as a consultant. Okay, so far so good. Good for you, by the way. 20,000 is even better, but let's just say 10 grand. You can live on that, my friend. Cool. Life is great. Well, once again, let's take this example, earning 10 grand a year. Well, state taxes, don't got to file. Federal taxes, normally speaking, don't got to file. Except you're an independent contractor and you're an independent business owner and an entrepreneur, sole proprietorship, etc. So actually you're obligated to file. Damn. Now, what that also means is with that deductions and stuff like that, yeah, your actual income tax state will be zero. Your actual income tax federal is going to be zero. Employment tax, 15.3%, my friends. Theoretically, if you do earn $10,000 in this example, you've got to file, even though you can write off your income, personal deductions, this and that, you're still going to owe 15.3% of 10 grand. That means you're still going to have to pay $1,500 at the end of the month, which is Social Security and Medicare. Yep, sure are. Well, and to be accurate, it's not exactly 15.3%. It's by the time you're done with a little figuring, you can't pay tax on the tax. They deduct the tax. It actually works out to 14%. But fact remains, you've got to pay taxes. That employment tax is one word for it. Self-employed tax would be another word for it. And Social Security, Medicare would be another word for it. But you can't deduct your way out of this one. So yes, you are obligated to pay that, even if you only earn 10 grand while sitting here in Vietnam. Well, that kind of sucks. Paying any amount of money sucks in general. Well, there's more to it than that. Go figure, huh? So let's dig in. What are some examples of things? There's more to it. Well, let's look at this from a few different perspectives. One is a perspective of where are the lines. Two is where are the definitions? Okay? And a nice disclaimer here is I'm talking real generally. I can't speak for your particular situation, but just talking real generally to give you a nice starting point and a nice overview in general, how this is together. Now, number one, where are the lines? Well, here's a nice line, $400. What this $400 line is, if you earn less than $400 in total as an independent consultant for the year, then it doesn't count. Your first $400 is a gimme. As soon as you hit $401, then you're not only obligated to file, but you're obligated to pay the 15.3% / 14% on that money, which means you got to pay them $60-ish, let's just say. So that line is really quite important. Now, an example of this would include my cousin is actually a farmer in the United States, and he wants to bring in people to do various things. Maybe we got to burn or destroy a barn. Maybe we got to take care of the pigs one day. Maybe we got to get out and rake soybeans or whatever the case is. Well, it's more advantageous for him to actually bring in 20 separate people and pay them $399 a piece than to hire one guy or three guys and then pay them a few thousand a piece or whatever the case is. Because you can, as an independent business owner, farmer in his case, you can bring somebody in and pay them $390 and say like, oh, I just hired this one guy for this one weekend job or whatever the case is, paid him $390. He, Sean, writes it off on his taxes. Done. So he's smiling. He's good. And the recipient, the employee, the contractor, accepts that money, shrug, smile, thumbs up, and walks away. And no 1099 tax forms need to be filed. He doesn't need to specify who it even was necessarily. He doesn't have to get into details on the guy. Doesn't need a SOCH, doesn't need any details of or anything. Doesn't need to report to the government who it was. And he, the recipient, doesn't have to report where the money came from. Life is great. $400 is the United States line. Anything less than that, gravy. You can go to a casino and win $399 and walk away, no questions asked. You can hire somebody to do a logo for you for $399, and you don't have to do any 1099s, no employee status, nothing, right? So this is a really important number to know. Bearing that in mind, if you find yourself doing work for people, for customers, etc., as long as those transactions are under $400, meaning like $399 or less or whatever, well, even though you're doing work for them, you don't actually need to issue a 1099. You don't actually need to report it, make it official, make a big deal out of it, and ultimately don't need to pay taxes. Nice. So that's a winning ticket, is being able to break up transactions and break up jobs into chunks that are smaller than $400. For some businesses, in some situations, this works out really well and is very doable. An example of this would be, hey, I will do, voiceovers. Great. But each voiceover for each individual company costs what, $100 or something, let's just say. As long as it's under 400, you can do voiceovers for as many people as you want. And they don't have to issue any 1099 tax forms, report this, report that. And basically, you can just kind of take it as a cash check payment, PayPal transaction, and walk away and be done with it. Awesome. Awesome. So it's really important to know this threshold, okay? This is the independent consultant becomes a official 1099, need to report it, independent consultant number, $400. That's it. That's it. Now, most people, most of the time, fall under this number. However, if you find yourself like, let's say, working with a student, and we're talking officially here, okay? They're following the rules 100% honest way. Well, truthfully, if there's a Vietnamese person that wants to hire you, let's say twice a week for an hour a pop for, let's say, learning English, well, in this circumstance, maybe they're paying you $20 an hour. Well, that's $60 a week. Well, times 52, well, that's a pretty respectable amount of money. Certainly more than $400. Technically, yes, you've got to report that. Yep. Technically, under the definition of income, under the definition normally considered, under good faith, that would be an example of income earned by you as a independent consultant and ultimately as a independent person owning your own business, independent contractor, entrepreneur, sole proprietorship, et cetera, et cetera, et cetera. To be clear, Form 502, as I linked, or 501, actually does give you exact definitions about this, but I'm summarizing in general. Okay, great. Well, okay. Let's look at this from a different direction, though. What's the big idea here with trying to report income in the first place and or trying to collect employment tax in this 15%? I mean, what's the big picture? Okay, well, here's another look at it. In general, and let's just pick an example to make the numbers easy. You, as again, American person living in Vietnam, accepting gigs throughout the world on an online digital nomad sort of basis. Okay. Let's say company A pays you $10,000. Cool. For example, a various number of gigs, hires you for a month, or you do 10 websites for them at $1,000 a pop, whatever the case is. There's $10,000 that was here that now became yours. Okay, cool. Well, here's the thing. The U.S. government wants to, at some point, collect taxes on that $10,000. For example, an ideal way of doing it, or a simple way, would be if this company doesn't pay you anything, but takes this as profit. For example, the owner takes it as profit. Sweet. Well, now the owner is going to pay the employment tax, the 15.3%, and the owner is actually going to pay the income tax on it. Okay, done. Sweet. So it's been taxed. So far, so good. Now, if the company itself wants to pay you this $10,000, the company, want to write this off on their taxes as an expense. All right. So they're going to basically state like, whoa, we contracted this person for this amount of money. So this is an expense for us. So we don't owe taxes on this 10 grand. And instead, you, the recipient, do owe taxes on that 10 grand. That's the point, is the government want to collect it at some point. So company A, are, in order to get away with getting rid of 10 grand and not paying taxes on that 10 grand, are going to have to issue a 1099 to said person over here, or have individual receipts, all of which are under $400 times X amount spread across a bunch of different people, organizations, locations, and so forth, ultimately equaling that money. What this means is, in general, if you as a consultant over here want to accept 10 grand a year, let's just say, in general, there's got to be a 1099 there, and thus you're going to need to report that as income, and thus you're going to need to file your taxes. Yep. And thus you're going to need to pay 15.3% on all that money as you receive it. Yep. This is especially true if indeed there is an actual 1099 on file. So to be clear, a 1099, what that means is that it's the equivalent of a W-2 tax form. So basically what this means is that it's a declaration to the tax authorities and to the government that indeed this money moved from this place to this place. Specifically between people. A normal employee would have a W-2 form. So a normal employee who received $10,000, the company A would write a W-2 and probably do tax withholdings in your behalf, and ultimately pay you the money, report all that in the W-2. W-2 hits the government. Then the government's going to question the recipient. Hey, these guys said 10 grand hit. Did you report 10 grand? Yes or no? If not, you should. We're going to assume that's probably what you should have, that kind of thing. So far, so good. And if you're independent, that's going to be a 1099 form as opposed to W-2, but same concept. It's a reporting to the government that this transaction actually happened. This movement of money happened. We don't know taxes on it, but this dude does. Yeah, I mean, that's basically what it is. Now, a lot of times, people who are working and living in Vietnam as a consultant do not receive 1099 tax forms. Because let's say they're working on Fiverr, Freelancer, or other various online gigs, teaching online with this company, that company, meeting people face to face, that kind of thing. The cool part is, as far as the government is, United States government is concerned, they just mostly care about the numbers that have hit the 1099. So what that means is, if company A, B, and C each paid you 10 grand and each of them issued a 1099, you sure as hell better report that. And yes, you need to file for sure. Oh yeah, absolutely. And to not do so would be non-compliant. And yes, you owe taxes on that for sure. And whether you file or don't, they're going to assume that this was all profit, and they're going to nail you as hard as they can. So anyway, in short, if you didn't get a 1099, well, we're getting into the gray area, aren't we, folks? All right, so let's go there. I need a few second break. But let's get a little deeper into the gray area, and how this fits, especially as an independent consultant. Okay. All right, and we're back. Thanks for your patience. All right, probably crack a new beer here too. All right, so hey, I know this isn't necessarily a glamorous topic in a normal sense, but as far as I'm concerned, needing to pay $3,000, in taxes versus needing to pay $0 is a difference of $3,000. And actually, that's pretty glamorous and exciting as far as I'm concerned. But that's just me. So anyway, hey, let's dig a little bit deeper here. Because really, one reason for watching this video is how can I get out of paying any taxes at all? How can I make that number 0? Well, let's go there. All right. So, examples of times where you absolutely need to file for sure, and to not do so would be a blunder. Examples of times you need to file for sure include, nice summary. You receive, in general, you're married. Yes, in general, yes. 2, you are receiving benefits from the government. Yeah. There's anything having to do with the word alimony or child support. Anything with those? Yes, for sure. You hold an official business officially registered in the United States with an official address, for example, an LLC in the United States, and you're earning more than $400 at said LLC in any way, shape, or form. Yes, you need to file for sure. You live in, if you ever earn more than $12,000 a year, yes, you need to file for sure. Okay. Now, let me cover this one. What happens if you don't file and you stop paying taxes altogether? Nice. Here's an example of tax evasion, okay? And I'm going to write this to get into it, okay? All right. Here's how tax evasion works, okay? Because, I've heard this a whole bunch of times. An example is, if the stock market goes way up, well, what I'm going to want to do is just sell all my stuff from the market, make a good $3,000 or $3 million bucks, and I don't want to pay taxes and all that, so I'm just going to up and leave the United States and just get the hell out of there. Would that work? Yes or no? The short answer is sorta. Yeah, it kind of would. As a matter of fact, if a person owes a lot of taxes, it takes the United States government a long time to come after you, figure out that you owe them in the first place, and then ultimately get excited enough and or pissy enough to want to prosecute you for it. And ultimately, put forth the resources required to ultimately track you down, and then blah, blah, blah. Examples of the way that the United States government and or the IRS can otherwise track you down and or mess with you and make your life difficult include they put judgments against you. And these can include wage garnishment. A common example of this would be like a 30% wage garnishment. So that means the IRS people won't actually even knock on your door. They won't even call you. They'll just talk to your employer and say like, hi, this is the IRS. We need to garnish 30% of Brad's income, let's just say in this example. And then that gets automatically done regardless of choice, regardless of anything that they say. It's got to be done. Boom, done. Yep, that's a great example. Now, another thing that the government can do is if they have enough judgments, enough evidence against you, they can go ahead and start seizing assets. So examples of this include, putting a lien on your house would be a great example of something they would try first because that takes very little effort. That takes about a phone call. So what that basically means is, let's say you own your house and let's say there's a bit of a loan on it, for example. Well, when they put a lien, L-I-E-N, on that house, that means that house cannot be sold to anybody under any circumstances until that lien is cleared up. Ain't that fun? So that means, if you want to sell your house and move to a new one, afraid not, my friend. Afraid not. Even if someone came by and offered you $1 gajillion, nope. You got to actually pay off your tax debt before you can sell that house. Ouch. Similarly, they can put a lien on your vehicles and or other major assets such that they can't be sold at all until that lien is cleared up. Ouch. Yeah, it gets pretty ugly in no time. Now, likewise, under extreme examples, they can also freeze bank accounts. And that gets quite annoying, troublesome, nuisance, pick your favorite word. Yeah, and in some cases, they can actually take the money, but more often they just freeze it such that you can't access it, no matter what. It's just stuck there. The bank can't spend it. It's just there. And that kind of sucks. Now, the next level is they actually withhold any, Well, benefits the state or federal government would otherwise be paying you. Yeah, you don't receive those. The IRS receives that first. So, again, pension, Social Security benefits. Let's say you got a big old tax refund. You got 6 kids, and you got a big old refund coming your way. They suck that up first. You get no refund. Absolutely not. Yeah. Ouch. Now, the biggest fly in the soup, okay? This is the big one. The big one. When you owe taxes to the United States government, they block the reissuance of your passport. They block your passport. That's the gotcha. So, to say this a different way and to use an example, if you sold your stocks and got $10 million, well, normally you would owe the government, like, let's say $3 million of that, but you got smart and you're like, well, I don't want to pay the government $3 million. I just want to leave and go to Vietnam, Thailand, Fiji, some damn place, and then just live out my days there. Again, on the front end, that'll work. Sure will. And then the IRS is going to basically say something to the effect of, if you ever set foot on American soil, you will be instantly arrested. Instant, like at the airport. Yeah, you land in LA, beep, red light. You're instantly arrested. Yeah, hey, nice try. You were out of the country for 10 years, not wanting to pay your taxes? Well, And so the obvious thought is, well, why don't I just leave and never come back? Cool thought, bro. How long? But passports are only valid for about 10 years. So if you were to do this and get a new passport, well, after about 10 years, when you're trying to get your new visa, trying to buy a flight, trying to do, well, I don't know, anything such as live legally in another country, yeah, you're going to need a passport to be able to do so. Oh, it just expired. Well, all you got to do is go to the embassy and get a new one, right? Sure. They're going to block that. Yeah, you're not able to get a new passport while you owe taxes. Gotcha. Yeah, that's a big one. That is the fly in the soup when it comes to trying to avoid taxes and tax evasion in general, is they're going to get you on the passport side. Yep. And once they nail you there, what are you going to do next? Ideally, you have a backup citizenship or something like that, and or a backup passport from another country. Well, you can get away with it a little bit easier, sure. But any form of money that hits the United States and the United States bank account, et cetera, is going to get frozen or seized. Anytime you want to fly over, near, through, or touch United States land in any way, shape, or form, you'll be instantly arrested on sight. Yeah. Anytime you try to show up at an embassy to try to get a passport, redone, or anytime you just show up, period, you'll probably get arrested on the spot. Yeah. They figured this one out, by the way. So I'm just pointing out that tax evasion sounds cool in the movies, and a lot of people think they got this figured out. But truth is, yeah, the old-fashioned government, in their old-fashioned way, they got you. Now, again, how can we work with this and get around it and minimize our taxes and do it honestly and do all of this right, kind of all together at the same time? Well, once again, the big idea here is it a good idea to file every single year? Sure, especially if you're over 12 grand. If you're a small timer, meaning, again, making less than $1,000 a month, while sitting here in Vietnam, let's be clear, the IRS doesn't give that much of a damn about you. You're not that important in general, especially if you receive no 1099s from anybody and you're just taking small gigs here and there. Now, to put this in proper perspective, let's think about examples of people for whom their income or that don't matter so much, okay? Or negligible examples. Look, if I were to buy a motorbike for $100 that doesn't work, fix it, and then resell it for $300, do I owe taxes on that? Maybe, yeah. Technically, I could report that. But I could also argue that, well, I'm not an official motorbike repair guy. I'm not a sole proprietorship, or that's not the focus of my business at all. That just happened to be one transaction that went down. And as a result, no. The answer is no. I mean, likewise, we could think of other examples like, well, I happen to go downtown and pick up my friends and drive them home, and then they gave me $50 in gas money. Do I owe tax on that $50? Nah, not really. Now, likewise, if I got paid $100 by some guy to do one logo one time and he paid me in cash, do I owe it on that? No. So there's small scale enough examples to wit, we wouldn't actually really owe anything. Sure. And that's not like morally disgraceful, or that's not lying. It's just negligible. So thinking about things that way, if theoretically we could make all of the money that we always earn under all circumstances always negligible, then we owe nothing. Well, Well, that's pretty cool. Well, how can we go about that? Well, once again, if you can find gigs that don't include a 1099, meaning an American person who issued a 1099 to, let's say, you. To pick an example, if company A sitting in America, let's just say, wants $10,000 worth of web design done, okay? Great. So they want to hire somebody to do it. Well, at that scale, normally the company A would, let's say, go to hire a company in America, webdesignfirm.com, great. And then would hire said company, and then they would have a big old receipt that says, here's 10 grand in expenses. We don't need to pay taxes on it. Right. And that all that money went to webdesignfirm.com. Great. And then the IRS can trace that and go to webdesignfirm.com and be like, oh, yeah. Hey, did you get 10 grand from this dude this time? All right, awesome. There it is. Got it. Cool. Check. It checks out. All that's fine and dandy. But that gets a little hazy as soon as you switch and go international. For example, if that web design firm was actually located in Japan and they got a receipt from this company in Japan written in Japanese, well, the company here on good faith could write that off, and the IRS in good faith would say, oh, well, yeah, it must have cost you 10 grand. But the IRS in good faith would probably stop there. They're not going to fly to Japan to find out where is this company? Are there any Americans that work there? Do they owe us any taxes because of it, et cetera, et cetera, et cetera? Nah, it's kind of done. And the IRS is cool with that. Hey, it cost you this much to get this done, and that was a legitimate transfer done. Again, it stops there. So let's just say we think about it that way. If you indeed are an American person here in Vietnam and you do web design and or any other type of consulting and so forth, well, the fact that you're an American versus the fact that you're a person that happens to be here in Vietnam is interesting. Because as far, again, as this 10 grand from company A to you is concerned, if it's just considered a random payment to a, well, not a random, but a $10,000 payment to a XYZ company in XYZ other country, well, the IRS are going to stop there. It's going to be considered a reasonable expenditure under reasonable circumstances. To wit, the IRS, are not going to dig any further than that, and are not going to go and investigate said company and find out, whoa, are there any Americans that happen to be working there? And what is the social security number of each of the American people that happen? They're not going to detect that one, as long as it's under a reasonable threshold. What this means is, instead of billing yourself under your name, your social security number, and asking specifically for a 1099, if instead you just have an entity name of any kind, position yourself as being located in Vietnam, and blend in with the rest of the Vietnamese consultants that are already here, hell, make your invoice in Vietnamese, well, the IRS is not going to dig that deep into it. Which means, and along the way, let's say the company A doesn't issue a 1099, but instead just has a receipt from you. 10 grand for web work. Done. Great. You can be totally honest on that receipt. And that's it. In other words, I'm not saying lie. I'm just saying the government, don't know about it. And as long as you're on a reasonable number, not millions, they don't care either. Really, they don't care. They don't care. I want to be very clear. This $12,000 line here that we keep talking about is a line where it's just not worth it. It's not worth the effort to dig any deeper. It's not worth the effort to send detectives out. It's not worth the effort to audit the heck out of this. It's not worth bothering with. It's negligible. So as long as we can keep ourselves in the negligible world, we're laughing. We're laughing. We're laughing. So, to say this a different way, as you're working, and let's just use an example of you earning $15,000 while sitting here in Vietnam. Okay, technically, and let's say that's through work that you're actively doing in your own entrepreneurial kind of way, and or teaching online and so forth. Great, more power to you. I'm glad you enjoy it, and I hope so. Well, let's use this as an example. Well, question one, are you over $12,000? Yes. So that means you need to file your taxes federally in the United States and in the state that you reside in if you were there more than 5.5 months. If not, no. Cool. Next, your total income tax that you owe is going to be basically zero because you're going to be able to deduct out the personal deduction and the foreign earned income deduction. So, but you also are going to owe employment tax, 15.3%. So on that $15,000, yep, 15%, dang, dang, which is going to be over $2,000. Yeah, buddy. So in general, if you earn 15 grand while here, in general, you are subject to about $2,000 in tax. Yep. That's especially true if you receive 1099s. They have reported income and they can prove that you earned $15,000. Now, while we're there, if you're just receiving this on cash here and there, money here and there, in this account, that account, this source, that source, a little on PayPal, sometimes the checks, and there's no other documentation, floating around, well, they can't really prove anything, actually. And they're not going to mail you an angry letter on, where's our tax money, bro? No. They use different wording, by the way. But, yeah, they're not going to hassle you over it, basically. So as long as there's a lack of documentation related to the incoming money that you have, you're good to go. Now, let's move on to the next step here, okay? There is, and I'm going to find the exact name here real quick. This is called the self-employment. So this is called Schedule SE, okay? There it is. I'll write that for you guys. Okay, so normally, a normal employee, normally residing in America, normal circumstances, is going to get a W-2 form. That basically is reporting, hey, we paid this guy X amount per week times this many weeks, blah, blah, blah. That's your standard classic W-2. Great. If you're an independent consultant, 1099, boom, same idea. Yeah, we paid this guy this much money. Boom, done. Now, this is number 3, the SE form, okay? Schedule SE. What this basically is a good faith declaration on your part as to the amount of money that you earned in an independent business sort of circumstance whilst residing in XYZ country, Vietnam, for example. Okay, great. Now, let's bear in mind what you write on here is really difficult to verify. That means it's even difficult by you to verify. I mean, let's face it, how many cash transactions did you get versus PayPal versus bank transfers versus, whatever the heck, right? So one could consider the SE form as an official declaration as to all of the money that you received net based on your circumstances. To use an example, you could write on there $10,000, and maybe you could say, I got it from company A, if you want to. Sure. You could just write it nice and vague, like, I got about 10 grand. And my expenses are about $500 a computer, et cetera. Sure. And then the IRS, are going to use this Schedule SE, meaning the self-employment tax, and ultimately it's called a Schedule C. The Schedule SE and Schedule C, these are forms where you're basically, again, just saying where your money comes from. Boom. Now, in general, being an independent consultant, business owner, et cetera, et cetera, et cetera, yes, you are obligated to file this, and thus you are obligated to file your taxes, and thus you are obligated to pay 15.3% on all the income that you just earned. Okay. Now, here are the two ways, other considerations, I'll put it that way. Number one, if you focus your energy on income that was not only earned, but proven to be earned, let's focus on that, meaning a 1099 was issued, money coming from clients that reside in the United States, AKA money that the IRS knows about. Okay, if we make a bit of a distinction there, we're doing pretty good. For example, if I were to earn $10,000 from American company A, B, C, and D, plus earn $10,000 from Vietnamese company A, B, C, and D, that means I earned a total of $20,000. You know, I might be more inclined to just kind of report the relevant 10,000 part that came from America, and I might be inclined to not worry about the not America part, you know? So I guess I'll let you decide on what out of all the incoming money you want to put on this SE form or Schedule C form. In general, I feel like it's morally right to put on the money that has been earned from American sources, which in my case is zero. But let's bear that in mind. Now, number two, not only can you be selective on what money you include, but number two, we can also consider expenses. Now, this is different than normal write-offs. A normal write-off has to do with personal income, meaning like income tax, federal or state or whatever, right? Well, when we consider actual net profit and loss, which again comes down to Schedule SE and Schedule C, let's get creative here. Now, to be really nice and exact, I'm going to show you this number, I hope. That actually lists out, example expenses. For example, okay, let's say you got $10,000 coming in from other sources. Well, we have expenses we can add. And again, this is on Schedule C. Advertising. Did you take, how much is the internet? How much is your rent? How much is your motorbike? How much is your flight ticket out here? How much does it cost for your visa? Yeah, I mean, that counts. Yeah. What about, your electricity costs? Did you hire anybody else to do any work on your behalf? Huh? Any consultants anywhere? I wonder if you might have had a consultant, because every consultant you got subtracts from that final amount that you ultimately owe 15.5% on. In other words, if you have, let's just say, $10,000 in income in this example, well, you would actually owe about $1,500 in employment tax. Yeah, Social Security, Medicare. Regardless of your other write-offs. Yep. However, if you have $5,000 worth of expenses, including, again, rent, utilities, personal health insurance, let's just say, traveler's insurance, plane tickets. Let's see what else we got here. Legal and professional services of any kind. Nice. Now, again, this is on a Schedule C form. I'm looking at Part 2, 8 through 27, if that matters to you. Then you want to look at it yourself. Contract labor, depreciation. I got to be real careful. Don't mess with depreciation too much if you can help it, because that gets sticky. But hotel costs, sure. I mean, if you are an independent consultant, you happen to be living in Vietnam in order to do your consulting, it would be reasonable to assume that you are, I don't know, sitting in a hotel and or eating food and or had to move yourself there and so forth. Yeah. So the cool part is, writing off your hotel and rent, while here in Vietnam is a reasonable thing as far as your tax filing is concerned. But that would be a little trickier to do while in America, paying rent on your given apartment or house or whatever. So yeah, there's definitely, no doubt about it, tax benefits to being here in Vietnam. So the goal here and the big idea, and what this all comes down to, being an independent person while sitting here in Vietnam, what this all comes down to is being able to live here, work here, earn money here, and so forth. And ultimately, it all comes down to the Schedule SE and the Schedule C, the self-employment declaration, and your Schedule C, what you doing here, declaration. And again, this all comes down to employment tax, 15.3%, which is flat regardless. Yeah, anything over $400. Yeah. Minimizing that number. So if you check out this IRS Form 501 and you take a close look at Schedule C, Schedule SE, you'll see for yourself that number can become pretty darn low, pretty darn quick if you let it. So, what are some other thoughts related to this whole big picture? Well, the other big thoughts are retirement. Right here. Retirement benefits. Okay, well, as normally as an American, we expect that by age, whatever it is, 65 and a half, I think it is, you get Social Security benefits from the government. So far, so good. Okay. And as politicians put it, it goes in a lockbox and we're not going to touch that money. Okay, so far, so good. Now, there is a minimum requirement to be able to get that money. Specifically, that means 40 credits, okay? So that means you've got to have 40, air quotes, credits in order to receive it. Anything less than 40, then you don't. Well, what does a credit mean? Well, a credit basically means you earn, if, for example, you earn $1,400 in a given year, that's one credit. If you earn, let's say, $6,000, well, that's 4 credits. Okay, so the maximum credits you can earn in a year is 4. Awesome. Well, here's the thing. The number is 40. So that means if you made more than $6,000 a year, and then you get 4 credits a year, and you worked 10 years at least, well, then you got 40 credits. In effect, at that point, you will receive Social Security benefits once you retire. Sweet. Good to go. Good to go. Now, if you earn less than 40 credits, then obviously no. If you earn more than 40 credits, it makes no difference. What this basically means is, if you've already worked in the United States for 10 years, earning greater than $6,000 a year, and you already have your magical 40 credits, you're good to go. You could basically report 0 income whilst living in Vietnam here, let's just say, and still retire and still get your money. Well, that's kind of cool. Now, a different point is how much money will you actually receive from the government once you actually retire? Well, that's a more complicated question. But in general, I could say the more that you pay in to, of course, Social Security, Medicare, taxes, income, etc., the more that you report in, the better. Obviously. Sure. I don't want to accidentally give you wrong numbers, so I'm not going to quote stuff. But if I were to just ballpark, if you're paying a little bit of money and you don't work for that many years and you retire early like me, yeah, shoot, maybe I'll only get something like $600 a month once I retire and I'm an old man. Versus if I were to work super hard and earn a boatload of money, well, I might get as much as $2,000 a month, 600, $2,000. That would be an example. Now, obviously, I'm totally cool with nothing, but if I got $100 a month, I'd be smiling, whatever. But just so you know, retirement, as long as you work 10 years, as long as you're earning more than $6,000 a year, your retirement's coming. Done. Now, a different question is audits. What happens in the case of an audit? Because let's face it, I don't want to get anyone in trouble, and I don't personally want to be in trouble, and I don't want to be audited, nor anybody be audited. Great. Well, let's go there. First of all, when it comes to, let's say, quote, quote, small fish, which is to say people like me and a lot of digital nomads who live out here, basically people earning less than $12,000 a year. We could definitely put ourselves in small fish world, okay? Which means, again, the amount of money and difficulty in searching out and seeking people like us is, the difficulty is high, the payoff is low, and can't be bothered. Okay, in general. Now, another way to answer that same thing is there's many levels of audit, okay? For example, there's the full-on audit that you'd probably see in movies, which is like they send a bunch of officers there who don't smile, and they're getting like $300 an hour to go through everything. Right, okay. That's the hardcore level 5, let's say. Okay, great. No, they have smaller levels than that, which can include like, please resend this information, XYZ. Or maybe they'll at least contact your tax preparer, may or may not be you, and ask for, can you provide documentation to clarify this point, or this point? Okay? That would be an example of an audit. It's not that bad of an audit. It's just clarify. Okay, makes sense. Do it. Good. Now, there's another kind of audit, and the one that's, I guess, most relevant to folks like us sitting here in Vietnam and whatnot would be, an example of this would be, hey, Brad, you didn't file taxes in 2019. What gives? Well, 2018, for example. What gives? And we think that you should have filed taxes appropriately at that time based on our estimation and so forth. The fact that you didn't, what we're going to do is we're going to average the last 10 years of you earning income, take the average of those last 10 years and assume that you earned that much money and assume that you owe us the appropriate amount of tax money based on that average out assumption. We're going to do that by default. Prove me wrong otherwise. That's kind of what it's going to sound like. So yes, under those circumstances, I would have the option of complying with their estimation and calling it a day. But the reality of the matter is I earned a shitload of money while back in the States for many years. I try to, on paper, earn zero while I'm here in Vietnam. Awesome. So that estimation would be out of step with the actual amount I earn here. So to go down this path, if I, Brad, were to get audited, let's just say 2018, oh yeah, our old friend, Schedule SE, Schedule C. I would actually write up, well, yeah, obviously, here's the sources it came from, and Here's the expenditures that I had. I mean, I wouldn't send them zero, but it wouldn't be much either. It'd probably be a couple grand worth, I guess. And sure, by the time I'm done in a given audit, I'd probably self-report at least a couple grand, worth of money that I've earned here. And then I'd probably accompany it with a check. Sure. And then they'd probably take my check and look at my numbers and be like, oh, well, you earned damn near zero, paying us a couple $100, call it a day, peace. Right. And then it'd be over with. Sure. Now I am mentally and situationally and receipt-wise prepared for that event. However, if 3, 5, or 7 years go by and they, Vietnam, do not request an audit of any kind, nor do they request any accompanying information, nor do they have any questions for me or anything like that, then as a result, my 2018 tax year will be just considered basically non-filing year. Didn't earn enough. Done. No questions asked. That's the goal. If a person can just, quote, quote, fly under the radar, get it done, and, make it all happen and get by with as little tax implications as possible, the better. It is not unreasonable in general for a person to want to travel the world for a year and earn zero income. That happens all the time. There's millions of people doing that this year. Do not worry about the fact that you reporting zero income will become a red flag. That is not true. It's not true that earning zero income is weird. In fact, a lot of people do that. For example, volunteers, world travelers, hell, the dude riding his unicycle across China for 2 years. What do you think his taxes look like? Didn't even file. That's right. That's speculation. I don't want to speak about that particular guy. I don't know for sure, but I can safely assume it's zero. It's not weird to present zero income, and it's not weird to not file. To be very clear, if you receive W-2s, 1099s, especially 1099s, or you have an incorporated business that received income of any kind. In other words, if other people reported income to you, to the U.S. government, and you just deny that you received it, then you got a problem, my friend. Then you got a problem, okay? There is a difference between forgot to mention and knowingly, blatantly disregarded, okay? Oh, I forgot to mention that this guy, paid me $20 to work with him for 2 hours. I forgot to mention that. I blatantly disregarded the fact that I received $10,000 from this company and signed off on the 1099 that was otherwise issued to me. You can see how these two are different, okay? So I would definitely underscore, do not try to evade taxes in the traditional sense of that. Do not blatantly deny money that's otherwise registered to have come to you. That's not a good idea. You can write it off. You can write off stuff. You can explain it, sure, but don't disregard that. Don't blow that off. If you accidentally forget to mention income that comes in from miscellaneous random foreign sources, so be it. I guess I'll let you deal with that one. And the burden of proof is on them. Speaking of burdens of proof, I want to read this exact quote right here, right now. I will have this ready in a moment. Almost there. Here we go. quote, I'm quoting right now. Independent contractor status is the exception, not the rule. The IRS assumes that a taxpayer is an employee unless it is proved otherwise. The burden of proof is on the taxpayer, not the IRS, to prove independent contractor status. To say this a different way, you working independently here in Vietnam, in order to be obligated to file taxes means you're obligated, obligated to be an independent contractor, sole proprietor, running your own business, et cetera, et cetera, et cetera. That's not the default assumption. The default assumption is you're just a regular employee that's traveling the world. Done. In this case, you only need to prove it, and as soon as you cross that threshold of a 1099, as soon as you receive one single 1099, you're automatically obligated to file, and you're obligated to tell them everything you got, and you're obligated to fill out a Schedule SE and a Schedule C. You know, mindset. You're laughing. Don't file and move on. All right. So, trying to wrap it up here, and a couple of final things. Okay. If you're an American sitting in Vietnam, and you received an economic stimulus, check, let's just say. Well, now, I don't know 100%. I just know 95%. I'm just telling you. Does that change your need to file, yes or no? Well, again, if you're over 12 grand, meaning you earn 10 grand and then or you're earning 11 grand and this puts you over the line, sure. Then you're obligated to file. If you have no reported income and you only get the economic stimulus check only and nothing else, no, you're not obligated to file. If you have any of the other aforementioned reasons, then yeah, you're obligated to file. If you're obligated to file and so forth, yes, and you fill out a Schedule SE or Schedule C, you're going to put how much money you're in there. And ultimately, when they figure up your 15.3%, yep, they're going to figure in that, let's say $1,200, for example. Yep, you got to pay 15% on that, my friend. Sure do. And you can't tax write off your way around it. So that kind of sucks. But yeah, that's a simple one. Other than that, if you have any other questions, give me some questions in the comments, and I'd be glad to get after it. Glad to help out. I will give links to all of this relevant information in the comments and video description and so forth. I would be delighted to help you folks. Let's keep it legal, keep it fun. Keep it useful, keep it simple, and pay as few taxes as possible if we can. But anyway, thanks for checking it out with me, guys. Yeah, appreciate it. Look forward to the comments. Cheers, huh?